Game Plan Sunday. Today is February 23rd, 2020. We're here with the Wallstreet Jackboyz in our stock market strategy session live. And, if you guys never been here before, just understand what we're doing is that we're taking a look at what occurred over the past week, what we noticed coming down the pipeline here in the near term. And we're going to take that information and strategize to make some money in the markets this week. And we do this every week. Every Sunday, 7 p.m. Eastern time. Make sure that you subscribe, hit the notification, turn the notification buttons on so that you can get the notifications when we do go live, because you don't want to miss out on this money that I'm giving you. And a lot of other groups that to get this information I'm giving you, they charging $200-$300 per month for you to get this level of information on the level I do. Again, there's a lot of people that talk about buying stocks. They're very generic. We're actually technicians. We do this for real, for real. So you guys are going to see this live. You see how we do this. So if you like it, hit that thumbs up, okay? So a lot to cover. Last week was a good week. So if you guys at the previous Game Plan Sunday, if you look at all those videos, and again, I try to break some stuff down to bite-sized snippets out there on the web. But if you look at the Game Plan Sunday video, you can go to YouTube if you missed it. If you're not on the email list, if you're on the email list, you get it straight into your inbox. But in the videos, we call out the plays, we call the setups, we talk about the environment that we are in the market. So we talk macro, big picture, and then we dial into some individual names. And the plays that we called out last week was gold and silver. You guys already know gold and silver. That was the name of the game. Shame on you if you did not participate in those trades that was actually given out. And again, if you're new and you get the classes, those setups, those trades will pay for your freaking classes plus more. Okay. So that investment in yourself will be paid for, plus you make more. All right, so make sure you subscribe to the classes at wallstreetjackboyz.com. All right, so we're going to kick off here with the environment. I just need for you guys to see where we are in the environment before we dial in. What we're looking at right now is our handy dandy yield curve, okay? The yield curve, this actually gives us a little indication of what's going on with the with the economic environment, okay? So it's a lot of news that's out there. We don't trade off the news. We use the technicals to make our decisions. So this is one critical indicator. Let me actually switch to red real quick so you guys can see this. And what we're just taking a look at here is the 3-month, 10-year yields on the U.S. Treasuries, which is the safest bet in town. All right, we're not going to just, give you a whole bunch of nerd terminology. Just quickly, just follow here with me. This is where we are right now, real time. The inversion of the yield curve came on again. Okay, so February, we have an inversion here again. And we talked about this when it first happened. I'm going to put INV to signify inversion. We talked about it when it first happened. I told you guys if this thing continues to go down more, then you're going to start hearing more talks about a recession. So don't be alarmed if you start seeing people talking about a recession now, because now we have technicals that's showing these things. When the yield curve inverts, doesn't mean it's going to happen tomorrow, so don't panic like that. But it's definitely coming. And so that inversion lets us know where we are. Every time in the past, here you go here. That was the first time. And it popped out. So you see the markets hit these new highs because the inversion popped out. Okay. They're like, you got to quiet all that recession talk down. We got to keep the confidence in the markets. We got to keep people confident so they can keep on spending money. All right. When people get scared, they start saving. They're like, oh, it's a recession because I got to save. And that's not what the markets is built on. And a lot of stuff like people that's trained in the classicals, they don't really know about, gold. They just know about what they taught, if you go to school for your MBA and all this other stuff. You talk to these guys about gold, they be laughing at you because they don't actually understand this stuff. And, people that got Series 7s, people give too much weight to people with Series 7s. They just know enough information to pass tests. A lot of them don't even know what we're talking about here. So if you got friends with Series 7s, invite them over so they can actually get some of this wisdom over here, besides the book smarts. All right, so cool. So this is where we're at in the environment. This is just signifying a recession to come. All right, so just spell it out. All right. And again, these normally happen within 12 to 24 months. All right. And I would actually bring my countdown starting from, back here, basically in May of last year. So inversion coming around the corner. The question is, will it happen before Trump's, before the election, before 2020 election this year, or would it happen after the election? Right. And so, there's a lot of things that analysts take a look at here. And by the way, I just got my financial analyst designation, you guys. It was a lot of hard work. But yeah, I got that in there. Just so you know, I've been studying hard. Anyhow, I'm just taking a look at a lot of analysts, predicting, basically, if Trump wins, then everything should be pretty cool. But if Bernie Sanders win, then, that's going to be like a catalyst for us to tip into, a recession. That's one of the, scenarios that's played out, which is, further in time. But there was there was a situation that occurred here at the end of January that nobody even knew about, that was not a part of any mathematical formula, no mathematical equations. Okay. And that was the coronavirus. All right. This is the risk that nobody knew about. Okay. So when it shows up and it hits, now you have to start calculating for this. Okay. And so that's why, we're seeing a lot of things happening here with this inversion of the yield curve. This distortion here is letting us know that there's trouble. There's a lot of trouble. Okay. So trouble is in there. So we have to be cognizant that this is happening. Now, meantime, you guys have been seeing the markets scaling up, hitting crazy new highs. All right. So let me actually take off of this. You guys understand the yield curve. This is where we are in the environment. That inversion is letting us know trouble lies up ahead. All right. So let's go ahead and take that down. Here we go today. All right. Here we go today. All right. This is the ES right now, live as we speak. The markets are down. Let me actually switch to yellow for you guys. All right. So right now, as we speak, the markets are down. The NASDAQ is down negative, down 151 points, right? ES down 40 points, Russell down 23 points. This is actually really not good. Okay. So whenever the markets are down this much in the futures, okay, now this is overnight and the markets ain't even open. Okay. Markets open tomorrow, but this is like right now, that is really, really bad. And I'm kind of surprised that it's that bad, right now, which is interesting. I don't know if it's an overblow, but whatever the case is, this is not good for equities. So that means for you guys with the stocks, this is not good for long stock positions, but it is good for gold and it is good for silver. So we caught the technicals last week, or actually the week prior. And then we had some setups in gold. So let me actually just take a look at gold real quick right now. Yeah, Dustin, futures is tanking right now. All right. Congrats. Thank you, Mark. And Arlington, our rockhead friend Arlington, you guys can just ignore him. Oh, and by the way, anybody want to actually get their hands on that yield curve, it's on our website, and I'll drop a link over here for you guys if y'all want to actually check that out. Okay, cool. All right, so this is where we are. Gold was the lick last week. All right. So these are the levels in gold, all right? And this is the thing that I want you to understand, okay? Because you're never going to always get it perfectly right. You ain't going to never get it perfectly timed right. But we have our guidelines, right? That's what the classes are for. So if you don't have the training, that's what Wallstreet Jackboyz, go to wallstreetjackboyz.com to get the training. The stuff is very specific on when to take profits, how to mitigate risk and things like that. But we had this play that was called out in gold. As you guys can see these lines, they're on the, on the chart here. It's the Fibonacci's. These are levels that lets us know when to get in, when to get out type of stuff, right? So last week, again, we caught the move right up in here, right? I think we're about right here. Yep, we had the trigger that says get in. Now, none of this stuff was on the right side of the screen. None of those candlesticks going up, So go back to see the previous game plan Sundays and you will see what we're talking about, right? So if you go back, you'll see that's where we were. And so, we called it out. We called this play out in gold that's going to move up. Okay. So we got in at these levels, got in here, and then you ride the wave out. So last week, again, I got out right here. Okay. At the targets. Bing. Okay. So I didn't get out up here. I got out down here. Okay. Which that was my target. Okay. So anytime you hitting over 50%, and these are long calls that I played, right, in GLD and everything, and silver. So I had gold and silver. But once we got it to these levels, that let me know that that's profit taking zone. Okay. So we got in here, we buy low, and then we sell high. That's the key to investing. That's the key to trading. Okay. So the move continued to move higher, right? And the first, emotional, thing that you'll go through as a trader is like, man, I should have held on to it because I could have killed it. I could have juiced it, right? Anybody here know what I'm talking about? Hit that thumbs up if you feel what I'm saying right now. Come on now. When you look at it and it's still going up, you be mad at yourself like, man, I should have actually held on to it and I would have doubled my monies even more. I would have triple, quadruple my monies or whatever, right? But that is very, very tricky when you're in a very volatile market. Okay. So when the markets are very volatile, I mean, we have a lot of risk. Okay. It means we have a lot of like underlying issues in the markets. And this is going to be a very volatile year. Okay. You cannot be playing games with this year. It's not like buying and holding. It's going to be a lot of rough, big, volatile moves in the market. We have too many risk variables in the math equation that's colliding this year. Okay. And with the coronavirus entering into the equation, that makes things drastically worse. Okay. Because nobody could calculate for that. Now they're trying to build calculations for, the impacts of this coronavirus. Okay. But I just want to say, don't be mad at yourself if you took out at these targets. Okay. That was a good time for you to take out at these targets in gold. Gold is hitting new highs. That's great. It hasn't hit all it hasn't hit all record highs, but this is new record highs right now. Which is good. But if you got out here and got the profit, that's good. Okay. Let it come back down and then you re-enter to deploy your capital at a better entry point. But if you're still holding on to it, it's great. But you still need to be considering profit taking, right? And why do we say that? Because now gold is hitting overbought territories, right? Doesn't mean it can't go further, but if we take a look here, all right, gold is in the zone. That's out of bounds. All right. So it's like basketball game, a football game. You got your bounds, you got your out of bounds. When you trade in between the bounds, it's good. But when you go out of bounds, okay, you normally get those reversals. It'll bounce to the other side, okay? So that's the way we play this, all right? Now, I think there was some analysts from Citibanks that was actually calling for a price target in gold at 2,000, right? And, as an analyst, I could tell you guys how complicated it is for them to get these targets, but it's a lot of math and a lot of equations and things like that come out with it. It's just easy to look at the charts with the technicals, though, right? Okay, so let me just show you guys my levels here. I'm gonna show you how I come up with this. This is big picture on gold. This is the monthly chart. Okay, so this is how I get my levels. Again, taken from mountain peaks to valley lows. Okay, that's all we're doing. And so we take this mountain peak to this valley low. Okay, this is how I get the levels here. Okay, that's the Fibonacci telling us that's at 2,000. Now we got analysts that's doing fundamentals on it, and they're calling for the same target. So that's really, really, really big target for gold to hit, and they're calling for this within the next 12 to 24 months. Now, that's really, really interesting because in order for gold to hit those levels, what does that mean for equities? Okay, for gold to hit these kind of levels, that means that's bad news for the stock market. Normally, okay, equities go up. Gold goes down, gold goes up, equities go down. This week was interesting because we had a divergence in there. But the setups that we had told us to get in gold. So that's why we follow our technicals. But as you guys can see, for a long-term, target here, gold is poised to move higher. Now, why would investors be buying into gold? It's because there's a lot of risk in the markets right now, okay? Stocks, they're overweighted. I mean, they're overbought, they need to come down. They're too inflated. We got inflation, and gold is protection from inflation. So we have the central banks. They already, the market's already pricing in 2 more rate cuts this year. The federal banks are trying to play it off, but I don't think they have a choice. I don't know if anybody saw the WHO. They had a live televised event this past week. I kind of briefly looked at it, but I mean, they're calling for all the world central banks to, provide liquidity in the markets because of the coronavirus. I mean, again, this coronavirus, they had to get this thing contained, and they had to get this thing contained within like the next 2 weeks. And if they don't, the impacts on the global economy is going to be detrimental to the markets. So this could be the catalyst to drive us into a recession, actually. I think a lot of people was downplaying it, but this is serious business here because they're shutting off entire cities. And in order for you to get these hardware, these goods that you need, we need China. So as much as we're hurting China to try to force them into a trade deal, it still comes back on us because, I mean, we got kids over here that's building software to put in your phones and blah, 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 but you got to get the hardware from China. China's on gridlock. Can't nothing come in, can't nothing come out. So you got supply demand issues. All right. So now you got economic issues. And, that's a bigger problem. So they're calling for, central banks to, flood the markets with liquidity. I don't know how they expect for that to fix this. How does, giving money to these, financial wigs over here is going to do, solve that. I just don't even understand the rationale behind it. So anyway, that's going to be interesting to see. with that. But again, I just want you guys to see upside targets, longer picture term. So if you're, a buyer of gold, I mean, this is a real good, these are technicals here. And then we also have fundamentals from analysts from Citi Bank at that's calling for the same targets that my technicals are producing. So anyway, I just want to show you guys that. And so again, you should have been taking profits. If you haven't, then you need to be getting ready to take profits like as soon as like tomorrow. Okay. If you're in these trades, you need to be looking at taking profits for the short term. That means if you're trading options. Okay. Silver, same thing. Let's take a look. Actually, I'm gonna go back to my daily chart. Okay. As you guys can see on the daily chart, you can't see those levels, right? That's why I had to bounce. I had to zoom out. Okay. Give you the monthly chart so you can see those levels, because you can't see that 2000 target up there until I squint it in a little bit. Now you can see my targets up ahead. All right. But for the short term, we've already hit those targets in there. Okay. So that was good money that was to be made last week. Let's look at silver real quick. And same thing here in silver. Okay. Same thing in silver. I actually got out of silver earlier. Let's see. Yep. We were in silver. We got in right here. And then that move like that, right on that next candlestick, this weak candlestick, I was out. I was done, right? I was out right here. That was good enough for me. Shoulda, coulda, woulda stayed in there and milked it a little more. But hey, a win is a win. You got to get all you can when the environment is very volatile, okay? But the play, it moved out exactly the way we wanted to move, okay? Hit these targets up ahead. It's still going forward. Now, these things can still go higher. Definitely, definitely can still go higher. But we want to actually edge our entries into them. We don't want to get in at the highs, okay? Everybody was talking about Tesla and space. Let me see, space, SPCE. Everybody was talking about this last week. All right, so everybody was talking about the space thing last week. If you guys caught any of the short snippets that we throw up on Instagram and everything, I chopped some of the segments from Game Plan Sundays because we have a lot of content that we cover. I know some people just don't want to watch the whole thing, so I try to take some snippets, some highlights from it. And so this is one of the things we talked about with space. We had some people that called it out, and it was an interesting situation as I talked to you guys about space itself, the way people think about space. People don't quite understand what space is. And so people get excited when you start talking about space. You're thinking about Star Wars, you're thinking about Star Trek, you're thinking about in the blackness and all this other stuff. But I've actually studied all this stuff. And so what y'all thinking about going out of space ain't even out of space. It's called lower Earth orbit. And they're lower than that. They're high up. Just think about this. Airplanes, they go with like 35,000, feet in the air. So when you're looking in the sky, you can't even see the airplanes. Just think about that as 35,000. And then when they go, higher, rockets, high altitude balloons, these things are going like 100,000, feet in the air, 100,000. I believe the International Space Station is supposed to be about, 250,000, somewhere around there, feet in the air. But they're still not outer space. Like outer space is something we haven't been able to do. They say we've done it. Again, I think it's a lie because, again, we can't do it today. This is why they've been defunding NASA. Obama did. A lot of people was mad at him because he was mad. He said, y'all can't get out of low Earth orbit. Y'all still using primitive technology. Why we giving y'all billions of dollars every year? It's a lot of money in space. Understand what I'm telling you. Follow the money. So when you see Elon Musk and you see Jeff Bezos, he got his blue company, and then you got Sir Richard Branson. We're taking a look at his Virgin Galactic company. All these guys are competing to get these space contracts. These companies, they are failing companies. They blow through so much cash. If you look at the fundamentals, it'll run you away because they burn through too much cash. The key thing is they're competing to get these government contracts because then you get taxpayers to fund your failing companies so that you could do all this fantasy stuff out in space. All right. So that's why I'll be telling you, like, okay, I know that the hype is there. Y'all excited about it, but it's not going to go anywhere. And so anyway, there was interesting thing is that there was an analyst that came out from Morgan Stanley that said that they had a price target on this company here at $20. Okay. Now, I'm a baby analyst. These are the big boy analysts. And this is what they're saying that the company is actually worth. So the problem is new traders jump in off the hype and you're buying here. is not even worth here. Okay. It's not worth none of this money. This is speculation. This is, for stock market purposes. Now, yeah, you can make money. Don't get me wrong. Hey, if you made your money, make your money and get the hell up out of there. This is not to be buying and holding because, again, as I told you guys last time, the whole space thing, just forget about it. You got to do your own research on it. They just can't do it. So it's a waste. It burns through too much cash for them to even do it. NASA don't even have spacecraft to even get to space. They got to hitchhike flights with Russia. Okay. And then, so you got Elon, who's the most ambitious of them. He getting all these government contracts. I mean, these companies been failing, but now you got government contracts that's funding the company. So you can go out here and do all this crazy stuff. Anyway, if you made your money in here, then get it. Okay. Whatever, get up out of there. They got earnings coming up here. So we'll see what that looks like. That's soon. But just imagine if you or the rockhead that thought you were a genius because you bought in at this high. I mean, the very next day it dropped all the way down here. Okay. So you can't follow, the news. That's why we say we use the technicals. We don't trade off the news. Okay. The news pump and dump a lot of stuff. This is a pump and dump right here. You're looking at it. You see the pump up and it's getting dumped off right now as the analysts start to come out and tell you, hey, this thing isn't worth this, that, and the third. All right. So anyway, that's just, my draw on this. And it's the same thing with Tesla. They're going to burn through a whole lot more cash. And the key to investing is that you're investing in companies that you're hoping that it can deliver value in the future for you. Okay, so you can make money. And the question is, can they do that? Right. And they have these ambitious goals. And you got to take a look. We're in an economic cycle that's not in the best situations. And people are really going to have a coming to Christ, meeting, with their families and all this stuff here now. We got a lot of companies that's laying off. We got manufacturing in recession levels. We just had service numbers that came out and they dipped for the first time since like 2009. And that's a telling factor because we have a service economy. And so in the service economy, they've been brushing off the manufacturing numbers, right? We've been calling it, for the past 6 months, but now we got service that's dipping. Now you get that sell off on Friday. All right. So a lot of that was from, service numbers. Okay. That's these guys, they do all the research. They know this stuff. When that number come out, it's not good. So then they start, going into safe havens. All right. So that's what you guys are seeing in the markets. So I just wanted to cover that because I know it's a little popular one that everybody was talking about last week. We traded technicals, man. If there's no setup, man, you don't make that trade. Okay. And so here I am close on time here because I told you guys I'm trying to get you out in 30 minutes. So this week, let's actually dial into it real quick. If you guys got some setups that you want to look at, I'll just take a look at those real quick. But I don't have any long ideas right now. Everything is pretty short. You know what I'm saying? Like you take a look at this, gold is a little overbought. So I really don't want to, get into gold again right now. We have to see how this plays out. Bonds, utilities already hit their new highs and they didn't pretty much perform as well as the other sectors, which is interesting because I guess they already made a move. But if you guys got some stuff you want to look at, let's take a look at it. I'll just pull utilities up real quick so we can take a look. Yeah. And so, you saw gold and silver do what they do. Utilities already hit its high the week prior. It's coming bouncing back down here. Now, that doesn't mean that, big money wouldn't power back up into here this week coming up. But, we need to see a setup. It's overbought. I don't like it for that reason. Okay. The Russell, let's take a look at the Russell real quick. All right. So again, we talked about, shorting the Russell last week. Didn't get that move. I believe John Deere did beat earnings. Coincidentally, I wasn't expecting that. I think it's Fugazi, right? They claiming that they were not impacted by the coronavirus, but they have some tell signals in their earnings themselves. Again, we have supply issues. Okay. And so anyhow, any company that has exposure over in China, they're going to suffer greatly. Okay. So, again, all that depends. But we take a look here at the Russell itself, it's overbought. Okay. It is holding right above this, this target here. But it's, look like it's forming a double tops almost, if you will. And so, you get this kind of move down here to like the 100. So we need to see if this is going to, fade down. Again, it looked like it's going to fade down. If it can come down here, that'd be great. So you're short up here, you catch it all the way down here, you get out, that's how you'll play something like that. Let me actually give you guys back to the S&P 500 real quick. And then we'll take a look at the VIX and see what we got. So this is the S&P 500. I'm gonna like zoom in on this like a bit much so we can actually get that. All right. So we have all these levels. Let's see. So this level here, I'm gonna just take this off, remove that so we can get some clarity. All right, so the levels was letting us know where to get off. All right, everybody was going super bullish. You buying at these tops, and I told you every game plan Sunday in the past, I don't like buying at these tops. We need a pullback. If we get a pullback, that'll be better, you know, chance for equities to bounce even higher. But who's buying at these highs? It's a lot of manipulation. So you had all of this chopping up and down, new highs every freaking day. Then you pop and got that high, and then you get that significant drop, right? All right. So this is Friday, and this is now, right? It is bouncing off my Fibonacci floor, which is 618. All right. The next level will be this 50 moving average. A lot of institutional traders, they use this 50 moving average. You guys will see it work perfectly right there as well. So this is going to be a major level to watch right here tomorrow. Again, the markets are down pretty drastic. Now, they could be overdoing this move. And so this may retrace up tomorrow. So we're going to keep our eyes on this. Now, if this thing continues to bleed, again, you're going to watch this level and see if the markets is going to support the 50. All right. If it fails, then you're coming down here to the 100. And that's not a good look for equities, not at all. All right. So then you'll see gold, bonds, and everything else continue to move higher if that happens. That's not good. You're not in a good zone here, but we definitely in a much needed pullback. All right. Also, let me just show you the VIX real quick. All right, the VIX is our fear indicator. Fear indicator lets you know when fear is hitting the markets. All right. So, interesting thing, we have some levels up here at the VIX. Whenever the VIX is high, that means things are really bad. For you new people that don't know, we have these levels up here, levels up here. So we did tag these levels in the past. We're back at these levels again. Now, the interesting thing is that if you guys look at my chart, you see that blue arrow right there. Now, that is very interesting to me, okay? If you guys look at my charts, pretty much every time that blue arrow comes in, that is my trigger to enter, okay? It says get in, ride it north. If you take a look at, you know, all the times in the past, boom, what it do, okay? Boom, what it do, boom. It goes higher every time. Interesting thing is that this is at a high, and it's giving me that buy trigger, which I find that very interesting. Because again, on my stochastics down here, we got the buy trigger there as well. We got the trend moving upwards, and we got momentum shifting. Okay, all of this is moving north. And so because of all of this information in the technicals on the VIX itself, the fear indicator, I'm poised to believe that the next move higher will be here. And that more than likely look like it's coming this week. So fear is on right now, and that's the VIX, and that's the next target that I have in the VIX. Okay, so tread softly, hedge. This is a time to be hedging. Fear is entering into the markets right now. So those are my levels on that. You guys got anything you want to take a look at real quick before we bring the session to a close? I'll take those from you guys. Hey, make sure that you guys subscribe to the YouTube. Make sure you subscribe to the Instagram or what have you, all our social media stuff, so that you know what's popping at all times, right? So we drop the Mindset Mondays. Let me know if y'all like that. We drop the Mindset Mondays every Monday. That's to get you guys in the right mindset. We got Game Plan Sundays. This is today. This is the blockbuster event. This is school. This is class. This is where you need to be every Sunday, okay? And I stopped doing it for a while. We bought it back because a lot of people was asking for it, but really it was my wife. She was like, you should do it anyway because you do Game Plan Sunday on your own anyway. So I was like, you know, because I'm giving it a lot of value, and I'm not too sure if people are quite understanding the value that they're getting from it. And so, you know, it takes a lot of time. It takes money. It takes, research, all the stuff to put this stuff together. But it was like, yo, you know, it's a win-win situation because I do it anyway, right? So why not bring it back? So that's the reason I bought it back. So shout out to wifey for telling me to bring that back. So you guys are here, and I want to thank you guys for continue to be there. It's huge. UPS short side PM. Oh, thanks, Dustin. Yeah, it is huge, man, because you guys get to see all the book smarts, all the knowledge that you get, no matter where you got your training from. You get to see it put the test, you get to see it put the work, and you get to see the mindset of a trader, how they're making the decisions, why they're making the decisions. That's the value. That's how you get the wisdom. So that's why, again, people charge $300 a month for this type of stuff, man. Anyway, UPS short side PM inverse head and shoulders. Thank you, Ron. Let's take a look at that. Yeah. Okay. Yeah. So this is a really, really interesting chart here. Thank you, Ron. Y'all know Ron be coming through with it. So we're looking at a bear flag here. All right. And, that's what you're looking at, right? That's the bear flag. That's your trigger to enter, okay, when it breaks, and it's breaking, all right? We got the trigger, sell trigger, trend is moving downward. Momentum is like, this is trying to shift back over. But again, this is a bear flag, and it's actually making this bear flag move. So yes, Ron, I like this to the short side. Shorts in UPS, that's a good move. I like that. What else? PM, Philip Morris. This is the one you want, Ron? You talking about Philip Morris? Okay. So Philip Morris is interesting. He did mention that it's a inverse head and shoulders pattern, which it is. What I want to do is take this high to this low to get some up head targets. And this is what I see. Okay. So again, obviously you can see the head there, and then you can get, a shoulder down here, or you could just, make this the shoulder because it matches this. Either way, still that kind of move where it makes that, it does the inverse, it comes back up. It fills this kind of target level up here. Our Fibonacci levels give us targets up ahead for that. All right. So this is interesting because Philip Morris is a cigarette company, right? I don't know what other investments they're doing, but I didn't even know people were still smoking cigarettes like that. But, I guess they are. So people still smoking cigarettes. It's good for this company. And we got that super long bullish candle right there. So there's money that's piling up in there with that buy trigger. So yes, again, I like this to the long side. $91 is the first target, and then $94 would be the next target basically. So this is going to be interesting because I do want to watch this one too, because I want to see how it's going to move with equities, right? It's good to find stocks that does not move with equities. And we had that big sell-off in equities in the ES on Friday, but what did not sell off was Philip Morris. So good eyes there, Ron. I like this to the long side. That is good. Anybody else got anything else you want to see? Any other trades? All right. Okay, cool. And if you guys haven't gotten the Wall Street Jackboyz gear, make sure you get you some, okay? We got the sweaters, got the shirts, got the hoodies. All right, just go to the website, get them. They're dirt cheap, support, represent. All right. All right, so it looks like we covered pretty much everything here. Monday is going to be a watch and see day, okay? Remember, you don't always have to take a position every freaking day. You take a position when you got levels, okay? When you got targets. But definitely going to be watching this. Again, markets are down terribly bad right now, so that is not good. All right. So with that being said, we're going to go ahead and bring this to a close, but we'll catch up in the markets this week. Y'all have a good weekend. Peace.